Yes, y'all. We're doing it. Wealth on Wednesday. Glad to be back. Glad to be on once again, talking to you about the one ETF, one high yield ETF that no one is talking about. None of the pundits, none of the talking heads, none of the trading and investment shows are pushing it. Very little coverage is done on this ETF, and I want to dig into it a little bit. I did do a little segment on this some time ago, short while ago, talking about the SoFi ETF that is definitely a banger. When I say banger, I mean this thing is one that pays well. If you check it out, this was just a short but detailed look at how you can get this SoFi high yield ETF, right? And it's right here. I'm putting it in the chat, in the comments. If you're on YouTube, if you're on Twitch, you can see it. Definitely check out that video as well. But this is going to get into some other details about this particular ETF. Now, I want to share with you one thing about this ETF. The price. The price is right. Let me tell you, 52-week high, 52-week low. Here we go. 52-week high is at $19. 52-week low is at $12. Right now it's trading at 15 and change. Decent, holding pretty steady, no problems. I'm loving it. One of the things to go along with this is this ETF incorporates a short-term capital gain strategy, not a long-term capital gain strategy. And we're going to get into that a little later. But I need you to understand this, that by incorporating this strategy, right, this ETF delivers higher yield than expected. You got to believe it. Like I said, this one is a banger, and it's a banger for a good reason. And here it is. THTA. 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 That's it. That's the symbol. That's the one we need. That's the one we're rolling with. This one talks about how we get big returns on a little bit of money. Check this thing out. This thing is from SoFi. Y'all that follow me know I love SoFi. But $15 per share, come on, 12.39% yield. When I got it, it was yielding just over 14%. Monthly distributions. That means if you reinvest your income, right? Reinvest your income, cuts down on your return, right? Investing more to compound and get more on your next distribution. When it's distributed monthly, that means you're getting more hits than those quarterly investments and payouts. This one is a bond strategy with a volatility overlay. You're going to see what I'm talking about when I show you this next image. But understand, this is the ETF that I am all over, that I am Google about. You know what I mean? This is the one that I'm tripping about, right? This is the one that I'm talking about. And when I say it, I mean it. This thing is delivering. I own it in my taxable account. I own it in my taxable account because it's high yield, and I like income. I own it also in the HSA, which is my health savings account attached to my business. And so with that, I'm able to see this thing churn out returns that are unmatched, and I'm not going through a whole bunch of crazy risk. And I offset it with iShares government ETF. What I use is iShares government ETF to offset that, which is investing in the government, treasuries, tips, things of that nature. Now, here goes the thing about this ETF that is wonderful. Not just the price to enter as an average investor, $15 per share, right? But the monthly distributions, over 10% in yield, and it uses a different strategy, right? It uses a volatility overlay strategy rather than some of the strategies that we use as far as leverage ETFs that tend to be more options trading. Look how it compares, right? And this is important. When we look at it by comparison to JEPI or DIVO, THTA is not focused on blue chip stocks. It's focused on treasury bills, right? Okay, so it is a bond income ETF. It's a bond income ETF. ETF is an exchange traded fund. It compiles multiple underlying bonds. Now, instead of being sensitive to stock price, it's sensitive to the market volatility of the underlying investment, which is the treasury, right? Treasuries are pretty steady and they're sensitive to interest rates. Now, what happens with JEPI and stocks, ETFs like that, they tend to deal with a mix of dividends and capital gains. What we're dealing with is ordinary income and STCG, which is the short-term capital gains strategy. Now, take this into consideration. Short-term capital gains are taxed as ordinary income, which can range from 10% to 37% depending on your income bracket. So this may not be as good as a municipal income investment for some folks, but it can be offset with municipal income investments or other government investments. That's what I use the GOVT in order to offset this investment. I also use iBond strategy through iShares with iBond ladders as well, which I have incorporated into my taxable account. And that one makes it work for me because it provides heavy potential, right, to balance out at the end of the year my tax liability. That's what I'm talking about. And a lot of times we don't get into tax liability, but tax liability can weigh down on all these returns. That's a funny thing. Investors use this strategy in order to combat tax efficiency versus high turnover, right? Tax efficiency versus high turnover. What happens why do we get into index funds? Well, we get into index funds because we don't want to have all those different transactions going on, buying in and out of stocks, and it gives you the low turnover, which also allows you to have that low expense ratio. This is beautiful because here we are using a strategy that offsets your tax efficiency along with high turnover. So you're dealing with transactions within this portfolio that are built and set up in order to lower tax liability, harvesting tax losses. How do we do that? Well, here goes the funny thing about harvesting tax losses, right? This one comes into effect. The harvesting tax losses comes into effect in this way. Look at it right here. Boom. Put it in the comments and put it on the screen. Tax loss harvesting, investors strategically sell losing positions before the end of the year to reduce their taxable income. So we take the losses, sell them, get them out of the way, and then we still incur income from those losses. Make sense? Hope it does to somebody. Now, that cuts down on the tax liability. The tax efficiency of this is that now here you are with this investment and less tax liability. How do they do this? How do they do this? Look at it in comparison to the other ETFs that are putting out high yields. They are not correlated to the S&P 500, right? Or the NASDAQ or any of those stock indexes. These are based upon their core holdings, which are treasury bonds. So the investment in the government allows you to get this high yield that you can't get from your average treasury bill investment. You're investing in treasury bills, you're getting about 4%, sometimes 5%. Here, we're hitting at over 10%, and we're getting it monthly. And they're churning it out because they're doing this tax loss harvesting strategy. Now, what I'm saying is, here's an investment that continues to kick out great yield with very little coverage. And why is it doing this? Well, think about it. SoFi is still one of those fintech stocks that people are still trying to figure out. SoFi is one of those fintech stocks that people have yet to identify as a mover, in the same vein that we look at Webull and we look at Moomoo, as well as we look at Robinhood, companies like that. And so SoFi now positioning itself with numerous offerings. Go back some time. SoFi used to offer weekly payouts. They had a core dividend payout and a TGIF payout. Thank God it's Friday. And those were paying out weekly when it first came out. These were ETFs that operated in the same vein, but they focused on strictly bonds, and then they focused on strictly dividends. Now they've come up with this enhanced income ETF that is delivering, and it's delivering on a continuous basis. Check it out. If you're looking at income, delivering over 10% a month, I'm there for it. Hey, I hope this helps you. I hope this works out for you. I hope you see the value in this, and that can be one of the top ETFs in your portfolio. God be with you.